We ended the fiscal year with a revenue growth of about 17% at rupees 26,494 crores, which is equivalent to US dollars 437 million dollars. And our profits grew 19% from about 3,120 crores to about US dollars 475, and the revenue for the fourth quarter was around 6,884. In case you folks have these numbers, basically what we are saying here is that you saw a substantive, or we feel we have a substantive turnaround and a movement upwards in both revenue and in profitability. Looking back at the last 1 year, we have been able to exit quarter 4 with a 2% margin improvement. We had articulated this earlier also, that while our communication business took a growth pause, we leveraged and saw this as an opportunity to build our business, improve operational efficiencies, and align organizational structure toward new business realities. These behind-the-scene efforts have not only led to improvement in the EBITDA margins through the year, but also helped generate a very healthy operating cash flow ratio of 75% to EBITDA. Further, as you are aware, around December end, we strengthened our engineering services footprint with the acquisition of marquee Italian design and styling company Pininfarina. We have completed most of the formalities and expect closure soon. Our net cash and cash balances improved by about 2,000 crores in FY16 and stood at now close to 5,200 crores, say about close to $800 million. With the improved cash position during the year, the board was glad to propose an additional 6 rupees per share dividend to commemorate the completion of our 10th year of listing Tec Mahindra on the stock exchange, apart from retaining rupees 6 per share of dividend. So net we have now, there is a dividend of 12 rupees per share, which has a face value of 5 rupees. This total dividend of 12 rupees per share for FY16 would result in a payout ratio, including dividend tax, to around 47%. 10 years back, the company had an annual turnover of $280 million. With this year, we ended with US $4 billion, thus registering a revenue CAGR of 31%. So when you look at this company, please see it in perspective, that over 10 years, year after year, we have had a growth of 33%. I don't believe anybody can replicate this kind of a growth over such a long period, and being a relatively large company. Talking about the broader economy, I think we do live in uncertain times with currency values and economic growth fluctuating in countries with no really design or predictability. Europe, the decision of Britain is very critical as we go forward, whether it will stay in Europe or not. In case it does not stay in Europe, then we will have a huge pressure on the value of the pound sterling, which could come down at least in the short run. This obviously has implications for us because a fair amount of our earnings are from UK sterling. Similarly, US has its own issues which relate around the presidential election that can itself have impact on currency movements, on business, on the employment or deployment of technology groups outside the US. But despite these uncertainties, I am very optimistic that this company would continue to do well, because I think what really delights me in this quarter is that our cash flows have gone up substantially, and that has given us a base for proceeding further. There were issues on why the profitability had gone down. I had stated that even earlier when we met, that we pick up assets which are undervalued for multiple reasons but have potential. Our secret sauce, if I may say so, is to turn these assets around, and we have been doing that with a fair and a predictable regularity. This is exactly what happened, if you recall, with Satyam, what happened with other acquisitions. We did take over LCC last year. Yes, it was not in a great shape. We had to eliminate certain activities which were loss-making or didn't make sense, and we have now started the turnaround process. It's nowhere complete, but I am fully confident that we will achieve our objective with this company as we have achieved in all other acquisitions we have done. But the strength, the beauty of this acquisition, which I stated earlier, was that it has given us a brand new area to work in networking, which most IT companies are normally shut out of, and I think it has added hugely to the potential. But details, I'll let CP handle them, and obviously whenever there are any questions, both on strategy or otherwise, all of us here would be happy to respond to your questions. Thank you.
You know, I can only say that when I stood in front of you last May, we were a lot apologetic, because that was the first time after listing in 2006, we had actually shown results which were not in line with your expectations. I'm really very, very happy today. The reason I'm very happy is, one is that we did deliver a year which is a little above $4 billion. In Indian currency, about 26,500 crores, up 17% in rupee terms year on year. Profit after tax at 3,200 crores approximately, in rupee terms, 19% year on year. And I know many of our investors, many of our shareholders had always been asking for, a reason to celebrate. And we thought that, as Vineet shared with you, this is the 10th year of our listing, and we are celebrating it with a dividend which is now 12 rupees per share. If I look back at the year, enterprise business has done well, and communication business, in my opinion, had a tough year, and there are always some silver linings, and the silver linings are that Comviva did exceptionally well in the quarter 4. We also believe that the wave of mergers and acquisitions which had slowed down the business, the waves of, many of the industry factors in telecom, I think the confidence is back in the telecom sector, which effectively means we have started feeling better about the communication business. And if I look at the way the business is now shaping up, communication business outside the LCC or the network business is actually showing a fairly healthy quarter-on-quarter growth. I mean, we actually saw a 5.2% quarter growth in constant currency. Overall, we feel very good about the stability in our business. We believe that we have done well for both the growth and the margin recovery. We clearly believe that that overall all the verticals in enterprise have done well, despite of oil and gas still continues to, be the laggard. We have overall done extremely well in closing a very large deal in public services in United States for the motor vehicle registration and redesigning the complete system. If from a geography perspective, ROW has led the growth with 8.4% quarter-on-quarter growth. Europe and US have been witnessing a flat growth in constant currency. LCC, showed a decline in quarter 4. When I look out for FY17, I want to thank all of you for your support. It's been very crucial as we have not only continued our journey to be relevant, be part of the digital journey of 800 plus customers of ours. I think more important is that when I look at the transformation of the company, internally, every meeting we start our discussions around connected world and connected solutions. It doesn't matter whether it's BFSI, healthcare, the meeting has to start with connected world, connected solutions. Number 2 is internally or even externally, we realize that as a company we have outgrown from IT. So we actually talk about IT to DT. Now, when I'm doing an engineering services review, it is design technology. After Pininfarina acquisition, we are not only doing the functional design, now we are doing the style, we are doing the form. Similarly, when we talk to the technologists, we again talk IT to DT because we want to re-emphasize that we are discussing data technologies. We are following where the data is going. And similarly, when we talk to our BSG, the Business Solution Group, we again talk about data, analytics, and the digital technologies. So I think overall in the company, transformation of IT to DT, a fair amount of investment has been made. It will continue to be made. And I'm very proud to say that our business growth is coming in all the 3 areas where our customers are investing, whether it is running their operations, whether it is transforming their operations, or whether it is building digital capability for them to go and disrupt the market. So we are working on all the 3 strands, and I would like to believe that as the investments in cloud grow, as the investments in IoT grow, your company's investment in many of these center of excellences will only help us position ourselves better for 2017. I'm aware of some of the challenges that the global economy has, some of the geopolitical challenges that we all have, but I think as we look into FY17, you would see a gradual improvement in LCC performance. Kenny Young, who was the CEO of LCC, he is now decided to focus on only business development. He's become the vice chairman of LCC. Manish Vyas, who's the president of communication business, has temporarily stepped in as the CEO of LCC. And overall, there has been a little bit of a reorganization at LCC, but I think it is only to continue to sharpen our focus for the networks business. In terms of, quarter-wise performance, I think you have seen that the company has now grown their revenue to 1022.6 million. I've never been more precise. But the reason I'm so precise is because it's 0.8% growth. So I didn't even, I genuinely believe that, hopefully we will come back and start changing these numbers a little more. As I said, enterprise continues to do well. In terms of, communication vertical, Q4 revenue has been 520 million. It has been a flat quarter on quarter, and they were helped a lot by the Comviva performance. Enterprise has grown about 1.9% quarter on quarter in constant currency and 1.6% otherwise on quarter. I think overall all the verticals have shown growth. Retail had a exceptionally strong quarter in quarter 3. This quarter they have not contributed enough to the growth. BFSI has grown 8.7% quarter on quarter. Today we have Vivek Agarwal, our global head of BFSI, here in the room. Maybe after this formal press meet, if you would like to spend more time with Vivek. Similarly, manufacturing has grown 1%, technology, media and entertainment has grown 2.6%. Our Q4 EBITDA has had an improvement of 10 basis points. Again, I've never been so micro-precise, 16.9% to 17%. But it is positive, it's on the right trajectory. I think, overall, we continue to focus on operational efficiencies. We are continuing to focus on large deals. We're continuing to focus on building up a better relationship with all our 800 customers. We're continuing to focus on utilization, which is at approximately 80%, which is pretty good. And I believe that in general, ROW has been while the leading star. I'm assuming that Europe and US will recover in the next few quarters. And we generally feeling good. We signed some major partnerships with General Electric on Predix platform. We have had a few partnerships in the healthcare vertical. We have signed up a few partnerships in go-to-market in South America. I know South America has been in news for many different reasons, but we believe that for our solutions, which are applicable, some of our telecom solutions, some of our value-added service products, which are applicable to the emerging markets, the South America gives us a unique opportunity. So I can only say is that our work in progress is showing results. I'm definitely, I would say is that I'm happy with the trajectory. I hope it becomes better, and we will continue to work hard to try and make it better. With this, Milan, do you want to share anything, or should we open it up to questions? And as usual, okay, so let's open it up to questions.
Milan, to begin with, margins at 13.7%. If you could just break it up for us in terms of pricing, in terms of volumes as well, and the impact that you've seen of currency, and what's the expectation? Because margins have been contracting, and that's across the board. That's a problem that many players have been facing. At what point would you be able to contain margins and move it to the 14-15% level without giving back?
Okay, first of all, this is the quarter where we had a salary increase. Okay, so we have absorbed salary increase impact and improved the margin. Okay, so EBITDA margin, as CP mentioned, improved by 10 basis points.
So can you give us a breakup, Milan, of the impact of?
So salary increase, the headwinds came from salary increase, really. and the tailwind was efficiency improvement. I mean, we managed to improve our efficiencies in terms of a better utilization, better control over expenses, and recover the entire salary increase impact.
What about utilization? What is that?
Utilization is about 77%, including trainees.
So, CP, you were very precise, as you said. I've never heard you give the exact decimal point. So, a broader question on LCC, by what quarter can you expect it to be? Because the kind of turnaround you've seen in Comviva has been shown in the quarter and the numbers. But by when can you see the pressure that you're seeing from LCC, or rather LCC turn into a EBITDA positive performance?
Three parts to this question. One is we're doing a fair amount of product management. That means products which are in the right geography with the right yield. I think we want to focus on that. This effectively means is that certain parts of the businesses, after mutual consultation with the customer and agreeing with the client, we actually would not be in that business. So I would say is that 80% of the business we will retain and grow, 20% of the LCC business we will, in consultation with our clients at an appropriate time, decide not to continue further. And this exercise, in my opinion, because it requires, least or zero disruption to my customer services, should take about 4 quarters.
You've gotten out or you decided to withdraw from the payment bank business. What was the reason for that?
I don't even know from where you hear these things.
There is a press statement that has gone out from the
is it?
saying that Tec has decided to withdraw from the payment.
I think again, to be very, if when I look forward, yes, it was a conscious decision that we wanted to be in this business. We still strongly believe that it's a very large unserved market. Over a period of time, we realized that amount of aggression that has come into the marketplace, which only erodes the margins. Because anyway, it was a more of transactions and the volume of transactions with a razor thin margin. But the aggression that has come into the marketplace, we realize that the business profitability will take a much longer period than what we were willing to invest into.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.